If you've ever dreamed of owning a 2 to 4 unit property, building equity, and earning rental income, this is your moment. Today we're talking about something that's a total game changer for home buyers and aspiring landlords. Fannie Mae's 5% down multifamily loan program. Let's break it down. Fannie Mae now lets you finance 2 to 4 unit properties with just 5% down. That's a huge shift from the previous 15 to 25% down requirement. This program applies to owner-occupied homes, meaning you plan to live in one of the units. It works to purchase a home or get a no-cash-out refinance. Plus, it can be combined with special programs like home-ready loans and even home-style renovation loans. Whether you're a first-time buyer or looking to level up your living situation, this opens up a lot of doors, literally. Let's put it in perspective. As an example, say you're eyeing a $500,000 triplex. Under the old rules, you'd need a $75,000 down payment. But now, if you qualify for just 5% down, you only need $25,000. That's a $50,000 difference, making it way more affordable to get started in multifamily real estate. This program is perfect for first-time buyers, house hackers, and anyone dreaming of becoming a landlord without draining their savings. Now, who's eligible? The requirements are pretty simple, actually. 1, a credit score of 620 or higher. 2, a 43% or lower debt-to-income ratio. 3, steady employment. 4, enough income to qualify for the payment and any existing personal debt. 5, adequate cash to cover the down payment, closing costs, and reserves. But just a heads up, there could be more requirements depending on your situation. Plus, there are a few conditions to keep in mind. You can't qualify based on future rental income alone. And you need to have to be paying rent or mortgage payment currently. So if you're living rent-free right now, well, this program, it's not going to work for you. Plus, you'll need 6 months of payments in reserves, which is 6 months of your PITI, as well as an estimated 2 to 4% for closing costs. Now, this is where most buyers get hung up. Even though the down payment requirement is just 5%, you'll still need a substantial amount of cash to close and left over after the purchase. Do the math on your cash needed based on your desired multifamily home price. While upfront cash can be a challenge, here's some good news. Future rental income can actually help you qualify. Even though Fannie Mae adjusts it for a 25% vacancy rate, meaning you can only use 75% of projected rents. That's still a big advantage for offsetting housing costs. Now, let's compare this with programs with FHA loans. One big win for Fannie Mae's program is that there's no FHA self-sufficiency test for 3 to 4 unit properties. See our video on FHA multifamily loans to learn more about this requirement and what an advantage it can be with the Fannie Mae program that doesn't have it. Add in competitive terms and higher loan limits, starting at over $1 million for duplexes and going up to over $2 million for 4-unit homes in high-cost areas, and you've got a seriously competitive option. This program is perfect for first-time buyers that are looking to offset their housing costs, or for aspiring landlords that are eager to gain experience managing rental properties. It's a smart way to build wealth and set yourself up for long-term financial success.